Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report, online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure, Jim. Good to be with you again.
U.S. oil consumption is near pre-pandemic levels. What is that doing to the price?
Well, the last year when we had the pandemic in June, it was about 18 million, 18.3 in the same week in June. This week it was 20.8 million, and that's very close to where we were in June of 2019, pre-pandemic. So we're getting back to normal levels. And the big increases come in jet fuel consumption. People are flying much more. Last year they were 805,000 BOEs a day. This year it's 1.58 million barrels a day, and we're pushing back again to pre-pandemic levels. So air travel has picked up quite a bit. Gasoline demand was up by 80,000 to 9.44, and that is very close to, again, to the levels of 2019. So overall, we're finding the U.S. is, because of the opening and the high success rate with the vaccinations of people, that the U.S. is picking up faster than and that's encouraging, demand, and people are getting very optimistic about the price of crude oil. And you've got some prognosticators calling for $80 in the summer. Others are saying $100 next year. But the point to make is that even with this increase in U.S., there still is slack demand in India, South America, Africa, some parts of Europe, which are still under COVID. Of course, Japan with the problems they have with COVID. And then, you've got Vietnam and others which are facing tougher times, Indonesia, tougher times for the COVID. So you're seeing world demand maybe 96, 97 million, not the 100, 101 we were at pre-COVID in January of 2020 when oil was $62. So we're now looking at oil 74, and demand is 4 or 5 million barrels less. And you've got OPEC planning to raising production by 700,000 this month and 840 in July. My view is that we're going to at some point we're going to have a surplus of oil, and if Iran comes on, that just gluts the problem even more, and their talks will continue starting next week in Vienna, and there's over 1,000 issues that they've already resolved. The U.S. is, because they were moving forward, has removed sanctions on companies and individuals that were on their sanction list. So it's like, you do this, so I'm going to back off here. You do this, I'm going to back off there. So it looks like we're heading towards a deal, even with a new prime minister president in Iran, with a more hardliner in play. But the negotiations of the current president have been held with support of the supreme leader, and he's the one really calling the shots. So my guess is we'll be looking at Iran bringing on 1.4 million by the end of this year, and that will more than make up for the growth in demand in the wintertime. So my view is that at some point we're going to be looking at an inventory build versus an inventory draw, and that will be when the price starts to cool off from these levels. And I think OPEC also realizes that at $74, you're incentivizing the U.S. shale production to come back on. You're incentivizing OPEC cheating to grab extra revenue. And so they probably want to see that the price gets back down somewhat so that it's more sustainable than, if it stays at 74 and then and the Iran comes on, we could be looking at $40 pricing, and they probably would like to see a range where maybe at the high end it's 70, at the low end it's the 50s, so that we don't have these wild gyrations where we get down to $30 or 20, or if you remember in April of 2020, we had negative pricing, which was crazy because of hedge fund activity in England.
With U.S. production rising, does that create a problem for Canada?
Well, Canada is doing very well on the export side because remember the U.S., the volumes that are coming on in the U.S. are mostly lighter oil barrels. So if you look at the U.S. export figure, U.S. is exporting 3.65 million barrels this week. A year ago, they were only doing about 3.1. So the increase in U.S. production is light oil. So they're exporting the light oil to countries that want to buy it. And they're using, because the refineries in the Gulf Coast and in the Midwest are used to handling heavy oil product, so they're using Canadian oil for that, and Canadian oil is going down to the States, and we're shipping quite a bit to the States. It's really worked out very well for Canada. I think that the number is 3.5 million barrels is going down to the States, and we provide them over 50% of their imports. So Canada is doing quite well because of the refinery situation in the U.S., which is built on heavier crudes, and of course they want to buy them at lower prices, and then they have the upgrading value as well. So R&M profits have been very strong, and I think when we see Q2 results, we're going to see from a lot of companies that potentially their profitability from the integrated is going to be more from their downstream than from their upstream, simply because of the high prices of the commodity. Plus, I think when we all go to the pump and buy our gas, I think we're looking at 133 here in Alberta, per liter. I think you'd probably be in the $1.60 range where you are. So I think that's really, a thing where margins are expanding. I wouldn't want to, I don't think people would like to hear the word gouging, but the reality is it's potentially like that.
Now, of course, the oil companies always have a great excuse for high gasoline prices. They're saying there's a shortage for some reason. Why would there be a shortage? I don't recall any major refinery fire this spring.
No, I don't think there's a refinery shortage in Canada. I think, because, they've already shut down so many refineries, the utilization rates in Canada are pretty good. So we have refineries in Edmonton and, of course, Strathcona. You have refineries in the eastern part, in the States, in the eastern part of Canada. So there should be no problem with it. I think it's just the reality of, the seasonal times when you go through maintenance periods where it can be tight because of that. But outside of that, I think the refinery situation is really in pretty good shape, and we're looking at margin improvement because of the fact that demand has picked up, utilization rates go up, which helps profitability, and that's all part of the reason I think we're seeing the R&M guys. So when we see Suncor's numbers and Cenovus's numbers and others, we're going to see Imperial Oil. They're all going to be showing some very strong profitability from their downstream side and potentially higher profitability from downstream than upstream.
Of course, Vancouver does have a refinery, the Chevron refinery in Burnaby, but apparently the city gets its gasoline from Cherry Point, Washington. Why would they import it when there's already a refinery here?
It could be just the mix of products that are being created and that the refinery down south is more efficient on certain products. So you might be making products that they sell to the States, and in return, they make products that go to you. Because again, the longer the refinery run can go with certain, products, all of that is what helps long-term profitability. And so plants begin to specialize based on the type of equipment they have for upgrading and for creating the product that we consume.
We'll have more with Josef Schachter right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, what's the heat wave sweeping the northern part of North America? I guess the southwest of the U.S. and now the Canadian West is getting hit by a heat wave. Does natural gas consumption go up then because of air conditioning use?
Very much so. So you're looking at very strong prices. I think we're looking at, $3.25 NYMEX, around the same for AECO, which is the Canadian price. So the prices are very strong because of the air conditioning demand. Remember, there was a lot of forest fires in previous years in the West, both Canada and the United States. And also the heat waves have meant that the water behind the hydro facilities is much lower levels, which means their ability to create electricity is lower. That all adds to the picture of if we have a hot summer, that we're going to have strong air conditioning demand, which means we're going to see less natural gas put into storage for next winter, which means the prices will be strong this summer because of the demand, and it sets up a very good winter of 2021-22 because we're going to be looking at stronger prices then as well. So all in all, the outlook for natural gas to me is my number one choice of commodities. I think light oil is my second choice, and the heavier the barrel, the less attractive I think it's going to be in the long run.
President Biden, of course, canceled the Keystone XL pipeline, but he was in favor of the Russian pipeline to Germany. What kind of a message is that sending?
I think it's politics rather than the environmental issues. The XL pipeline was an environmental win for the left wing of the Democratic Party. The issue now, of course, Line 3 and Line 5. Line 3, there's a lot of protesting going on, even though the courts have ruled in favor of it. Line 5 is still up for grabs. That's the one that goes under the Straits of Mackinac in Michigan, and the governor of Michigan is totally opposed to it, as are First Nations or Native groups in the states. So that one is still going through the courts and is problematic. But the one for Europe is really that it's almost 90% or more built, and Germany wants it. And Biden, who's trying to build relationships again in Europe, to work with them on issues like Iran and Afghanistan and Syria and others, felt it was probably the right thing to do to get Germany and France and others on side. And with the pipeline as built as it was, to stop it at this point would have antagonized Germany, and of course, the Russians would have been quite peeved as well.
What's the outlook overall for the fossil fuel industry when there's so much opposition growing? I mean, it's hard to imagine a world that doesn't need it in some shape or form.
Yeah, I think that what you're looking at is you got to look where. So in Canada, the States, and Europe, you have a focus now on ESG issues. Companies are under pressure, as we saw with ExxonMobil, where 3 opposition directors were put on the board because they didn't see movement on ESG as fast as the owners of the company wanted. So we had that issue. But if you go to places like China, they're still building coal-fired facilities. India still is doing that. So we're looking at a difference in terms of, where, and if half here's one for you, half the pollutants in the world are coming from China and India, and both of those really have low targets at the best and are still adding coal-fired. So whatever we do in Canada, whatever we do that is done in the States and in Europe, it's really not going to have a planet benefit unless China and India join the party. And also, you got to remember that there's jobs at stake in countries like Germany and Poland that are coal-related jobs, and they need to figure out a transition to renewable jobs or other new jobs. And that exercise of converting has not happened yet. And of course, with the heat wave and high natural gas prices in Europe, you're seeing them using more coal just to get through the hot summer.
Does solar and wind fail when we're in extreme conditions, either really hot or really cold?
Well,
which Canada has an abundance of.
The one thing I found which was interesting, I was reading an article this week, was that in the United States, where there's so much land that would be really perfect for wind power, there's also a lot of state regulations against it. So where we could have a significant increase in renewables and where the economics make sense, the politics of the local areas are not allowing it to go forward. People don't like to see the wind farms in their backyard, not in my, the NIMBY issue. And we're seeing more and more of that when it comes to some of these renewable plays. I think that's why we're seeing a lot more talk and in Europe more activity where they're going for offshore wind farms rather than onshore wind farms. Again, out of sight, out of mind.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim. Good to talk to you.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.